Hello friends, welcome back. This is again Rohit Devangan presenting to you a very interesting topic, which is demand and supply zone. Demand and supply zone are part of the most fundamental part of any market. Demand is a place where you see that there are a lot of people interested to buy at that price, and the price doesn't fall further. So is supply. There's a lot of supply, so the price doesn't move up, right? So as we normally do, we try to give you certain concepts. In this case, we are using demand and supply zone using rally drop based combinations, and as usual, we'll first give you basic idea or basic concepts of what those things are, and then we'll take you through our custom screener for filtering these stocks. Okay. All right. So demand and supply zone. So what is demand and supply zone? What are demand and supply zones? Demand is a zone at which trader or investor would like to buy or accumulate. So anybody who feels that this is the fair value or this is a price where they need to come and accumulate more stocks, when there's a consensus across larger section of investors or traders, then that becomes like a zone where there's a lot of people who are coming to buy. So that becomes the demand zone, right? So just opposite of that is supply. That's a place where a lot of people will feel that the price is already at a very so-called good levels, beyond which it is not likely to go up. And if there's a consensus, a lot of different investors or traders are at with that mindset, then the price is unlikely to go up. So that becomes a supply zone. Usage of demand zone is to buy stocks at that price, so that you buy at a very good price, and just opposite of that is supply zone, where you book profit or you short sell the stock, right? So a supply and demand zone can be found in a time frame. It can be at a minute level or minutes level, or it can be days level, hours level, weeks, months, or even years level, right? So you can have various different levels where you can do it. So this particular concept is not limited to a particular style of trading. It is applicable to all style of tradings. Okay, as I mentioned, intraday, few days, few hours, months, years, right? You can use this concept. So what are typically such levels where there's a lot of demand or supply, right? One is psychological number, like recently we have seen Sensex breaking 75,000 level. So people feel little discomfort that it's at level it's unlikely to breach. So once it breaches, then it might go up or down, but that's a psychological level. And then 100 being another very psychological number, that okay, 100 is a good price. So it may not cross above or below. So that's one level. The second level could be the previous levels, the previous highs or previous lows level can be good. Like 1 year high is considered to be a good support or resistance level. Resistance, in fact, 1 year low is good support level. Swing highs, recent swing highs, which has made a new swing high last week or few days back or few months back, that can act as a good demand and supply zone. Trend lines, if you're familiar with drawing trend lines, and the trend lines, you draw a trend line and then that act as a good support and resistance level, or indirectly good supply and demand zone. Patterns like a rectangle channel, triple bottom, many more patterns are there which can again give you a good hint of where the demand and supply zone is. As we have discussed, there are multiple different ways of finding it. What we are looking for here is based on a concept called rally, drop, and base. So these are three different kind of candles. We'll use these combinations to identify demand and supply zones. Okay, so first let's identify the key terms. What is rally? Rally is a big green candle. What it tells is rise. What it tells is that after opening, the candle has moved up significantly, so that a big green candle is visible, very easily visible, or can be spotted. Okay, just then next is base candle, or basically consolidation candle. They can be of a red color or a green color. The way to identify them is they are generally very small body or even no body, right? So either doji or small body candle are the base candles. They can be one or they can be combination, but rally is one candle for RBR or DBR combination. Base candle can be multiple, and then it's a drop. It's just opposite of rally, where you'll see that there's a sudden drop in the price, a big red candle. Right? So that's where these things are. We'll use combination of rally, drop, base to identify few scenarios for continuation or reversal or bullish or bearish pattern. All right, we'll start with continuation pattern. Continuation bullish pattern. So there's a pattern called rally base rally, which is a bullish pattern and a continuation pattern. Let's see how it looks like. So you have a rally, a big green candle, followed by few base candle or boring candles, and then followed by another rally. Okay. So what it does, so few things to spot: two green candles separated by almost in the middle of the two candles, you'll separate it by few different boring candles. Sometimes they can be overlap between the doji candle can have overlap. Generally, you do not find any overlap between the two green candles, but there can be good overlap between some of the doji candles, right? It's as the name suggests, or as it's mentioned out here, it's continuation bullish pattern. Now, what we normally do is we'll give you a concept and we'll also take you through how to use it and where to spot in the application of Top Stock Research or Stock AIA. All right. So go to homepage. In the homepage, you'll find custom screener, your favorite screener, where you can build a lot of strategies. Go to price action, the default tab which is opened as price action. Over here, you have an option of rally based combo. When you click on this, the default option which appears is rally based combo. We can simply go ahead and run it. Right? So when we run it, you'll see that there are few stocks, about 25 of them in the stock basket that we are looking at. So first was formed on 6th of May. So when you look at 6th of May, so you have a rally base and then rally, right? So this is a combination. The second option that we see here is you have a rally, then you have certain base, and then you have another rally, right? So very soon you'll see that this is another pattern which is getting formed. But what we are looking at is rally base rally. Now the question would be obviously is that so this has formed a few days back, which is on 6th, right? Why are you showing us today? The reason is it is to identify demand and supply zone. It is to identify demand and supply zone, so that whenever the stock comes down to this level, then you can go and add to your position. For example, let's look back and see that you had a rally boring. In this case, 1, 2, 3, 4, 5 boring candles, and then again a rally, and this is still unfilled. So whenever the stock comes down here, you have an opportunity to get into the stock if you have missed the original bus. Okay, so that's why unlike other screeners, in this case you'll find certain things which are pretty old. Like in this case, Tata Steel, the example that we have is 28th of March. So when you look at 28th of March, you have a rally base, another rally. So this is the zone which is unfilled, right? So whenever the stock comes down here, you can look to accumulate it, or whenever it bounces from here, you can further look to accumulate, or if the level gets reached, then we'll see that how to trade with those things. But for now, the simplest thing is to identify a rally base rally. So you have a rally base rally. Another example that we look for is BEL, Bharat Electronics. It was on 1st of April. So you had a rally base, again a rally, right? And then this becomes your good demand zone. Okay, so very simple way. Also, we heard you guys wanted things to be simple. So what we kept is very simple demand and supply zone. Just click out here, look for the option that you're looking for. In this case, the option is rally base rally. Just run it. Okay, you have other options, other things in the filter and this thing, which we'll see in the subsequent slide. Then the next one is drop base drop. So just opposite of that, this is rally base rally. Just opposite of that is drop. So you had a drop, consolidation, and again drop. Again a very powerful pattern, bearish pattern, and continuation pattern. So when you look at drop base drop, you run it, you'll find that on 6th of May, DBD was formed. So when you look at this, so drop base drop, and then market moved down. Another option is drop base drop. So this becomes your supply zone. Okay. Then let's see another example. This was for which date? See, if you see here, drop base drop, right? Again, you'll see that this is the zone which would act as a good supply zone, right? Also look at the previous patterns. It looks as a good supply zone. So in this case, this was a drop base, again drop, right? So this is how you'll typically find it. Another pattern is rally base drop. This is reversal pattern and a bearish pattern. So you had a rally, then you have base, and then again drop. So this should act as a new peak for the period that we are looking at, right? So finding peak, this could be a good way of finding peak. So when we see, what are we looking? Rally base drop. So we just go here and look at rally base drop, run it. So what period was that? It was 7th of May. So rally base drop. Let's look at another example. Which period is this? 15/4. 15/4. So this is rally, then 2 base, and then again a drop. So this zone would act, in this case, this zone would act as a good, this zone will act as a good supply zone. Okay, so a rally, 2 boring candles, 3 boring candles rather, right, and then a drop. So maybe to this level, right? So this would act as a good supply. So it did came here. It did came here and came down again. So it retested actually. When you see this actually retested and came down. So this is how you typically looking. You would be typically looking at. Okay. Next option is drop base rally. Again a reversal, but in this case it's a bullish pattern. So drop base rally. So when we look at drop base rally. Okay. So the example here is 30th of April. Okay, not a very good one, right? It's a pretty small one, so less important. 9/5. Okay, drop base rally, right? Then another example is drop base rally. So this will act as a good demand supply zone, goods rather demand zone, right? Or maybe here, looking at other interval, it can be here. So if so in this case it's sort of retesting and going up. So this would be a good candidate, good example, right? So what we have seen so far is basically we have understood the key terms: rally, base, drop. We have seen rally base rally, continuation and bullish, then drop base drop, continuation and bearish, then reversal patterns, rally base drop, bearish pattern, and then we have drop base rally, again a reversal, but in this case it's a bullish pattern. Okay, points covered in TSR, ready to use screener. We have clearly seen them, how to use it in a simplest possible way. The second one is customizable rally drop. So far what we have seen is the default option. There's another option available which is advanced. Here, so basically this pattern, again depending on different individuals, they may be looking for a variation of this or maybe little customization. So default what we used earlier was 1 candle. Here you can set maximum number of boring candles. So more number of boring candle, maybe up to 4 5, it's a good number, where it gives much better conviction that it was real consolidating, right, rather than a knee-jerk reaction based on a certain news. So you can set number of boring candle. So just let's run drop base drop with this condition and see if any stock is there. Adani total on 6th of May. So Adani total on 6th of May, this condition. We go to another one. Here it is, there are 2 boring candles. In previously we were looking at 1 boring candle. Here is up to 3 boring candles, I believe. What we have set is up to 3 boring candles, right? So 2 boring candles, drop, base, drop. Similarly, you can look at other different options, right? Here drop, base, drop, drop, base, drop. So this is another a good supply zone. This is another good supply zone. And when you start looking at it, even this level is a good supply zone, right? So drop, base, drop. So similarly, what you can do is you can really look at the market and you can play with this. So this being a price action is a leading indicator. There's no lag. So you can take best use of it and you can take decision really fast based on these things. Okay. So similarly, leg in size. So what is leg in? So let's take an example. This is leg in, the one which is just before rally or drop, before the consolidation is leg in, this is leg out. So you have an option of comparing leg in to a boring candle. So let's put a bigger number, let's say 5. So we want really big candle vis-a-vis your boring candle. So when we look at it, we'll see Adani Total Gas on 6th. Adani Total Gas on 6th, same example has come. Another example is, this is which date? 7. So this one again a good example. Vis-a-vis this boring candle, these candles are big. SRF, too big drop and a small boring candle. So the idea here is to give you some opportunity to customize the way you want. It does not mean that it's limited to these 3 parameters. There are about dozen parameters which we would be adding soon. But before that, we wanted to give you something where you can start with, and depending on your feedback, we'll be enhancing this thing at the same time without making it a lot more complex, right? So that's the idea, and that's the philosophy that we are following. Whatever we have, we want to give you simple, very easy to use, so that the complexity is completely hidden away from you, rather than giving you more difficult thing. Another way of doing this thing was using OHLC combination. You could go back deep into system and do these things, but this would require a very either a lot of time or require a lot of basically complexity to build these things. And also you will not be able to get some of the things which is built here, like in this example. Let's say we go back to RBR and we go to NSE 500 stocks, go to RBR date, you'll find some of the stocks which is as early as 11th of January. Why it is relevant? It is relevant because it is still valid, right? So when you go back on 11th of January, right, this is the level. So there you still have that zone. You still have that zone which is available, which is unfilled, right? So you still have that demand supply zone. You go to CIE India. What date was it? CIE India was 27th of March. 27th of March is this level. No, this level, right? 27th of March. So this is still unfilled territory, right? So this level is still unfilled. So some of you may want to go early, or some may want to really look for a longer term period. That's why you'll see some of the records. You'll see only those records which are unfilled. Had the stock come down to this level, this would have gone out, right? So you'll see only those things which are still valid, or supply or demand zone, which are completely unfilled so far. Okay, so we have seen all the 4 combinations out here. What does TSR bring to you apart from concepts? It's ready to use screener. We have seen the screeners. All the 4 screeners are available. Customizable. We have seen brief level of customizability. You go and click advanced option. You'll see all the customizable feature out here. You see, you can set maximum number of boring candles. As I mentioned, 4 or 5 boring candle will give you better conviction compared to a single one. But ultimately, it's your choice, your comfort level, what to use. Whatever mentor or whatever study material you have gone through, if they tell you something, try following that. Screener size, screening of all open demand and supply, as we have seen in the previous example. You will find some stocks which are as early as January or Feb, right, as we have seen in some of the examples. How to use this? Stock entry, rally, base, rally. So basically this is rally, you have base. Where should you make entry? If you are a conservative, you should wait for it to retrace a bit, and this would be a good level to buy. And this being a good demand zone, this will be a very good level to buy for a good rally. So very simple to spot, number 1. Number 2, it gives you very clear direction where to enter, exit. What we have seen is enter. We'll see other options available, much easier. What we have seen in ORB in the previous sessions, right? Similar to that, this is much simpler to see. The second one is breakout. So in this case, if there's a rally, base rally, then if you are an aggressive trader, you can just get in here, provided other indicators are supportive, like a good volume or TSR strength index is good, or whatever technical indicator, MACD crossover, or whatever technical indicator you rely on. You can go in a combination, you can get to the breakout level and then see a good moment. The third one is profit booking. So if you see that it is retracing from a previous swing level, coming drop, base, and again rally, then when you enter this, you can have a decent amount of target or a profit booking level, so you can exit at this level. right? If other conditions are good, you can get exit. So it does give you those opportunities also. Then comes as a stop loss, the most important part of trading, oftenly ignored. Whenever this particular demand zone, in this case RBR, whenever this demand zone is breached, you should move out. You should stop out of that market, right? So put a stop loss and then exit the market, right? Otherwise, a new direction can be formed. So rally base, and then if this is broken, then this level can act as a good supply level, right? So a lot of people would like to exit from this position. So a good place to exit. Then comes this target, as we have seen in the previous example. The reason why we kept as a separate slide here is because a lot of people would want to hear this thing for their clarity, right? So 5 things we have seen. Number one is entry point. Number 2 is breakout strategy. Number 3 is profit booking. Number 4 is stop loss. Number 5 is targets, right? The previous swing levels or whatever the previous levels are. Okay, so that's pretty much about what we wanted to cover. Now, one of the key questions which comes to your mind is, okay, so what we have told so far is demand and supply, same as support and resistance. Generally speaking, they are similar, but they are not same. In case of support and resistance, what you generally do is you draw a trend line, right? It's a single point. Whereas in this case, you have multiple points. Both have advantages and disadvantages. Like the example that we have seen is in the breakout strategy, right? If we go to one of the advanced and then we'll look at the breakout strategy. Okay, no breakout. Let's look at some of the breakdown strategy. Breakdown, right? So what we are seeing is breakdown of a level. So in this case, it's breaking down of this level, right? So single point is there, a single point which you are breaking down. Whereas when it comes to demand and supply, you would see that often there are a lot of these small candles out here, right? They can be same. So when you take it to candlestick, they may be same, but in this case they are not same, right? It's just one point. Whereas when it comes to demand and supply or using this rally drop combo, you'll have multiple of these things. So that in that way, it's slightly different than support and resistance. Both are effective, both are price action, both works really well. Wherever you feel comfortable, you can go there. But this is a very powerful thing, right? Often you don't find such screeners available ready to use. Generally, what your books or your training instructors or other study material will give you is an example. And then you have to go to chart by chart to look at where it is. And often you'll miss out a lot of interesting things. Our objective is to reduce that, looking things chart by chart and just taking you to one single place where you find all the screeners of your choice and then take an action, whatever you're looking for. Now, another thing that's interesting is, since this are long-term thing, right? So I go back to a simple RBR example, and then we go to over here, right? So one of the example as we seen DOMS was of January, right? Let's take another example, NHPC, which is 27th of March. We'll see is it a good example or not. 27th of March, like this example. Okay. Now, when you see this, the supply zone and this thing is somewhere here, right? So it did took a bounce from this level. Now, if you just go with a very simple thing, right, you may miss out some of the interesting things which happened before, right? So our idea is to not only show you the most recent ones, but also take you back. So if you're looking at something long term, then if you're playing on a slightly longer period, whereas in this case it's about 2 months, right? 2 months demand supply. So that should so in that case you can go to this level as well. Like this is a rally, right? So it moved up and then it broke that level. So if you are looking at a smaller period, this would have been a good stop loss level, right? Somewhere around would be a good stop loss level. Then over here, if you see in the same chart, you see multiple different options. You have a drop, base, rally. So very simple to identify. That's the beauty of this thing. At the same time, very powerful, right? So make full use of it. If you need any help or support, you can always reach out to some of the numbers mentioned out here. You can write your query using contact us, or you can request for a demo. Okay, so that's pretty much about what I wanted to cover. Very interesting and powerful feature. We hope that you'll make full use of it. And if you have liked this video, please subscribe, share, and hit the bell icon, so that we know that our whatever work that we are doing is basically recognized or is liked by you, so that it will create more and more things. For last 10-15 days, if you have seen, we have produced quite a few different interesting things. Simplified the stuff like opening range strategies were there. Previous range is something which we are coming maybe in a week's time. Gap strategies we had, breakout strategies we have, and we'll be bringing a lot of other price action strategies, so that whatever happens on the big day in maybe in 2 weeks, we may be getting a big news, right, related to election. We are well prepared for taking the right steps. So that will give us 2 to 3 weeks of understanding these concepts. Use it, do a little bit of mock trading using our mock trading platform. Set the alerts without actually entering these things. And whenever the condition is conducive, you can just get into these things much better, right? So with that, I'm just signing off here, and hoping to see you very soon with next set of strategies and screeners. Yeah, thank you. Bye.